Imagine if, 5 years ago, you decided to take a chance on a relatively unknown cryptocurrency called Solana, SOL. If you had invested just $1,000 back then, today, on August 27, 2025, you'd be sitting on a staggering $55,000. That's an eye-popping return of over 5,600%. Sounds incredible, right? But here's where it gets controversial. While the gains are undeniable, Solana's journey has been anything but smooth, and this is the part most people miss. It hasn't just been about growth, it's also been about resilience in the face of chaos. Let's dive into what made Solana such a roller coaster, and whether its future holds similar promise or if investors should brace for a more subdued chapter ahead. A wild ride through peaks and valleys. Back in 2020, Solana was still finding its footing as a smart contract platform. For those unfamiliar with the term, smart contracts are self-executing agreements coded onto blockchains that power decentralized applications, dApps. At the time, Solana wasn't even close to being a household name among crypto enthusiasts. Its price hovered around $3.44 per coin when its mainnet beta launched early that year. Fast forward 5 years, and it's now trading at over $204, a testament to how explosive blockchain technologies can be during their early stages of adoption. However, don't let the numbers fool you into thinking this was a simple upward trajectory. Far from it. Solana faced some brutal challenges along the way. The most devastating blow came in November 2022, when the FTX exchange collapsed. This event sent shockwave through the entire crypto ecosystem, but none felt it harder than Solana. Why? Because FTX had heavily promoted Solana and owned roughly 10% of its total market cap at the time. Additionally, many projects using Solana relied on wrapped tokens issued by FTX as collateral. When those assets vanished overnight, so did much of Solana's infrastructure and investor confidence. At one point, Solana's value plummeted by more than 90%. Imagine holding on to something knowing it lost nearly all its worth within months. Most people would have panicked and sold, yet against all odds, the network survived. By January 2025, Solana's decentralized finance (DeFi) ecosystem had rebounded, with its total value locked (TVL) surpassing $10 billion once again. This recovery demonstrates not only the project's underlying strengths, but also the resilience of its community. What fuels Solana's appeal? So why did capital flow back into Solana despite its tumultuous history? The answer lies in its core selling points: speed and affordability. Solana boasts incredibly high transaction throughput coupled with extremely low fees, making it attractive for consumer-facing activities like payments, gaming, and NFTs, non-fungible tokens. In fact, recent data shows millions of daily active wallet addresses interacting with the network, generating tens of millions of transactions during peak periods. NFTs, in particular, remain a bright spot for Solana. Despite the broader crypto winter between 2022 and 2023, Solana ranked third globally in NFT sales volume in 2024, raking in approximately $1.4 billion. This proves that user engagement didn't disappear entirely, even amid widespread pessimism. But there's another trend brewing that could shape Solana's destiny: tokenized stocks. These are essentially traditional equities represented and traded on the blockchain rather than conventional markets. Currently, nearly $500 million worth of tokenized stocks exist on Solana's chain. Should this asset tokenization movement gain further traction, which seems likely given the growing interest in digital assets, the amount of value flowing into Solana could skyrocket, benefiting both users and developers alike. Another emerging opportunity is the rise of on-chain AI agents. Think of these as small programs capable of performing tasks autonomously and interacting with dApps or smart contracts on behalf of users. While this segment may not replicate the astronomical returns Solana experienced over the past 5 years, it could still contribute significantly to the network's growth if adoption scales meaningfully. Looking ahead, will history repeat itself? Given everything we've discussed, Does Solana deserve a spot in your portfolio for the next 5 years?
Absolutely, but proceed with caution. Expectations need to be tempered because replicating the meteoric rise of the last half-decade is highly unlikely. Instead, focus on areas where Solana already demonstrates strong product-market fit, such as DeFi, NFTs, and potentially tokenized stocks. That said, volatility remains a constant companion in the world of cryptocurrencies.
Just as Solana recovered from losing 90% of its value after the FTX collapse, it could experience another dramatic downturn or surge at any moment. Are you prepared for that kind of unpredictability? And here's a thought-provoking question. Would you rather bet on Solana's continued evolution or explore other investment opportunities highlighted by experts? After all, according to the Motley Fool Stock Advisor team, there are currently 10 stocks they consider better buys than Solana. Some of these picks have delivered jaw-dropping results in the past. For instance, investing $1,000 in Netflix when recommended in 2004 would have grown to over $664,000 by now. Similarly, putting money into Nvidia in 2005 would yield over $1 million today. So, is Solana truly your best option moving forward? What do you think? Do you believe Solana will continue to outperform, or are you skeptical about its long-term prospects?
Share your thoughts in the comments below. We'd love to hear your perspective.